Hello friends, good morning. So in this presentation, I am going to give you a brief on the anti-profiteering rules in the GST, its implication on pricing strategy by the corporates, and also what auditor can review during the pricing audits. So basically, anti-profiteering provisions has been introduced in the GST by the GST councils at 18th June 2016. So what happened in other countries? It was evidence that whenever the GST got implemented, and after implementation, the inflation increased, pricing of goods and services increased. So just from the experience in other countries, this anti-profiteering rules has been brought in India, which has been brought in other country, which had been brought in other countries also. So what anti-profiteering rules require companies whenever there is a reduction in the GST rates, then they have to pass the commensurate benefit to the consumers. So, for example, in any supply of goods or services, GST rate is increased from 28% to 18%. Then they have to pass the benefit to the consumer. This benefit should be commensurate. It doesn't say that it has to be almost equal. So there are two type of scenarios can occur: the supply of goods and services where the prices are inclusive of taxes, or prices of second situation is prices of exclusive of taxes. So it's not very difficult to pass on the benefit where exclusive taxes, because of uh, when tax rates will get reduced, then it will be visible in the pricing. Automatically it will be visible in the prices. But where the prices of inclusive of taxes, for example the FMCG products or other products where the MRP, the manufacturer puts the MRP in the packets, are the goods or supply of goods or services. So especially it's not services, goods. So there the companies has to be a bit careful, because of reduction in prices, they have to reduction in GST rates, they have to pass the commensurate benefit to the consumers. So commensurate benefit, what is the commensurate benefit? Commensurate benefit means the all the facts and circumstances of the case has to be taken into care. For example, tax rate has been reduced from the 10%, but the price margins are has decreased because of the input cost increasing for 5%. So they have to consider even margins decrease because of the raw material cost increasing, and they have to pass the benefit propose they have to pass the benefit considering all these circumstances. So it's not required that they have to pass the benefit of 10%, but company has to be a bit careful whenever they are they're decreasing their prices, or even because of margin increased as higher compared to the GST decrease. Then they have to keep all the records with them, so that they can prove whenever it's challenged in the court of law. They can prove that, see, we have because of these things we have not passed exact benefit to the consumers. We have passed certain amount, certain benefit, or even we have increased the prices because of these reasons. So they have to keep the record, and they should be in a position to prove in the court of law. So why I am saying this thing, because there are some there is government authority which is and which is Director General of Anti-Profiteering. So they have tracked HUL Hindustan Unilever Limited in the National Anti-Profiteering Authority, which is basically he has all this privacy and gives decision on this on the anti-profiteering clause. So they have told that HUL has not passed the benefit of the GST reduction to the consumer, and they have made the profit of 400 crore rupees because of this. So if HUL has not done this, if HUL has confidence that no, because of these reasons we have not passed on the accurate benefit, then they should be able to prove in the court of law by presenting their records, accounting, costing records, everything. So also at the some of the Godrej consumer products, they have increased their hair color prices even after GST reduction. So they said that because of crude oil prices increasing, their margin has reduced, and because of that the crude oil prices are increasing in higher proportion as compared to the GST reduction in the GST. So they have reduced the price. So they are saying that we will be able to, if we are challenged, then we will be able to prove in the court of law. That's why I am saying that its proper records needs to be mentioned, casting records needs to be maintained, so that it could be proved in the court of law. Now comes to the internal audit point. Internal audit, when we are doing the pricing review in any company, FMCG company or any company or any manufacturing company or even service industry, then we need to see the whatever the price reduction has happened or price increase has happened, we need to compare with the GST rates, reduction in the GST rates, and also the costing records, so that we can whatever the pricing decision has been taken, that should be logical when we compare with the GST reduction and the costing records. And if it seems illogical, or for example the costing has decreased or costing is constant and the pricing GST has reduced but no benefit has been passed, but benefit very lower as compared to the GST reduction, then this could be certainly audit point, and we can point at the audit report. So this is my this was thanks for joining this session, and I think this brief session could bring more clarity to you as far as the anti-profiteering rules. If you like the video, then please subscribe to my YouTube channel. Thanks again.